Hello class, this is Dr. Fenton. In this video, I'd like to show you how to prepare a bank reconciliation. Now the purpose of the bank reconciliation is to make sure that the cash balance in our accounting records matches what the bank says we have in the bank statement. Now at the beginning, the two numbers will not match, and therefore we have to account for some differences, and that's why we have the bank reconciliation. So let's get started. I'll remove my video. And what we have is a small spreadsheet that I set up with some bank account information. So here's the information. The bank statement balance is $10,000. So the bank reconciliation is set up where we adjust the bank balance on the left side and the book balance, our accounting records, on the right side. So the bank statement balance is $10,000. We'll place it here. And this would be the ending cash balance we have in the bank statement. In our books, we show that we have $9,000, so we'll place that over here. And that's what we have in our cash account in our general ledger. All these other information items we need to put in the reconciliation, and at the end we need to make sure that the reconciled bank balance equals the reconciled book balance. So let's look at the first one. A deposit in transit is where we have made a deposit probably on the last day of the month, probably late in the afternoon, and it was not recorded on that month's bank statement. So we'll add that to the bank balance because we have this recorded in our accounting records, and the bank will get this recorded in the next day or two. So deposit in transit, and that is $950, and that's going to be a plus number there. The next item is an outstanding check, and these are checks that we've written, that we've sent to our suppliers and maybe utility companies, and they'll take a couple days before they get it deposited. Then it'll take it a couple more days to get back to our bank account. So the outstanding checks, and to save time, I'll just put A/S, outstanding checks. This is a negative number that will go in on the bank balance, because when the bank receives these checks that we've written, they will reduce our bank statement balance. Alright, so the next item we have down here is interest earned. And some of you might have bank accounts where you earn interest on like an average daily balance. And we really don't know how much that is until we get the bank statement. So once we get the statement and we see how much interest we've earned, in this case $10, we'll put this here. Here, that's $10, a plus number. The next one, a bank service charge. So they might charge us a monthly fee just to have the bank account there. I probably should start abbreviating some of these too to save time. But this was $30, and it's a negative. The bank took this away from our bank account balance. The next one is where the bank collected a note receivable. So I'm going to put N/R here. Oops. /R. Note receivable. Sometimes companies have lenders, people who borrowed money from the company, pay the bank directly. That gets the money into our bank account quicker, and this large amount will not have to be handled by someone in our company. So here we have $1,000 collected. That's going to be a plus number, $1,000. The next one is a non-sufficient fund check returned. So an NSF check. This is where a customer of ours gave us a check. We deposited it. Our bank gave us credit for that. Our bank sent it to our customer's bank, and our customer bank said, no, the customer does not have enough money in his or her account to cover that check. So they sent the check back to our bank, and our bank took it away from us. So we need to deduct this if we have not deducted this already in our records. And here we're assuming we have not done so yet. Another example you might run into is where there's an error on our books. So I have a note here. The error relates to utilities expense recorded incorrectly. So we wrote the check for the correct amount, but when we entered the check in our accounting records, we entered the wrong amount. I guess we were in a hurry, we're not paying attention, and entered the incorrect amount. But we found that when the check was returned back to us, and we saw it did not match our records. So here I'm going to put error. And this is our error, so it goes on the right side of the bank reconciliation. And I have also down here, this is going to be a reduction. So that could be either a positive or negative correction we need to make. Here the assumption is negative. So I've accounted for all the differences, and we now see that the reconciliation, two sides balance. So what we've determined is the reconciled bank balance matches our book balance. And so we need to get our book balance to this number here. We have this currently. We need to make entries with these items only to get our records down to this amount. So the first entry we'd make is for the interest. It increased our cash account, so we're going to debit cash $10 and then credit, I'll abbreviate, interest earned, abbreviate a little bit, $10. Okay. Next entry is for the bank service charge, so we can just call this service charge expense to abbreviate a little bit, and this is $30. That's going to reduce our cash account. 30, another entry. Then we will record the note receivable, so we now have the cash that increased our cash account for $1,000. Whoops, $1,000. And that was for a note the bank collected for us. So this note receivable, we're going to credit to reduce that account $1,000. And let's see, the non-sufficient fund check. The customer owes us that money again, so we're going to debit accounts receivable, and I'll just abbreviate for this, accounts receivable. They owe us the money, so we need to increase accounts receivable and show that our cash is being reduced. The bank has already taken that from our cash account, 200. And the final entry we have for the error, and since it relates to utilities expense and it's a reduction, we did not record enough expense earlier, nor did we deduct enough from our cash account. So utilities expense is the debit, and let's see, I need to correct that spelling there. I got an extra column there. All right, utilities expense, the dollar amount is $100. And now let's credit cash, 100. So after all these entries are posted to the cash account in the general ledger, then our cash balance will be $9,680, and that's the reconciled balance. So the key is on this side of the reconciliation where we adjust the bank balance, we only put items we have recorded and the bank has not yet. Now there could be a bank error that you would put down here. Those rarely happen, but if you do find a bank error, you would add or subtract to this side of the balance what's necessary, and then inform the bank they need to correct our cash account in the bank, like our checking account. On this side, we handle changes that the bank has recorded that we have not recorded yet. And since we've not recorded this yet, and our cash account needs to be not $9,000 but $9,680, we'll make these these entries to get the correct balance in our accounting records. So that's a quick review of the bank reconciliation. So good luck with your studies.